Hi, welcome to this video today, which is on the 21st of August. It's Saturday. This is our weekly Forex forecast. Just going to be looking at some pairs for the week ahead, which we think could offer really good risk to reward trading opportunities, and we'll go over the charts in just a moment. I also want to talk about the advantages of varying your bet size in the market. Now, in terms of using a static bet size, that is not the way to enhance profits and restrict risk. It's been proven in any probability-based market that you should use a variable bet size. Now, I just want to go through this in a little bit of detail when we go through the charts. I also want to talk a bit about taking profits, knowing when to take them, also how to get good risk reward trade entries into trends that are in motion, and managing overall account equity. So just basically some tips on decreasing risk and increasing rewards. Now, in terms of last week, it was a great week for us in the markets, and what we thought would happen by and large did. We're looking generally for a stronger dollar and yen moving forward. That's been our stance since the start of June, and it's worked very well. Now, I do think we could see pullbacks in the dollar and the yen, but they will be buying opportunities. Right, I'm going to go and look at some dollar and yen pairs and some other crosses. So let's go over the charts right now. But just before we do so, please do keep in mind, it is my view as of this specific moment in time. It can of course change in line with the market action and conditions. If you want all our trading techniques and our daily technical sentiment and technical analysis of 14 FX pairs, just click on the link beneath this video to get live access to our member center. You can also follow our Facebook page, join our Facebook group of traders, and finally check out our recommended regulated ECN broker. Now, I've been doing my chart updates for the weekend in the member center, so we're going to use the charts from there. So we're going to go and take a look at them right now. Before we look at the individual pairs, I want to look at speculative positioning in the USD. Right, let's go and take a look at the charts. Right, we are just on a chart of just general big money positioning in the USD against a basket of pairs, and it's three big speculative groups we got on this chart. Non-commercials, asset managers, and leveraged funds. Now, our view since June has really been that the dollar very oversold, and that speculators, big speculators, would cover out their shorts, and we've seen short covering in terms of the non-commercials and leveraged funds, and they've now got a little bit net long. Okay, a big group, asset managers, they're still very short. We expect them to cover even more shorts and go net long with the other two groups, and all three groups to increase their long position. Okay, so we've had decent dollar strength. That's mostly been shorts coming out the markets. Sorry. Now we're looking for big speculators to go long and push the dollar even higher. Now, in terms of the next chart I want to show, I showed it last week. Market was really, really short of the dollar. This comes from Sentiment Trader, and they note that the DXY just saw an end to its third longest streak of net short positioning in as many decades. This has historically been a positive signal for the USD. It was a positive signal last week. Now, in terms of the dollar, it did show good strength, but not against a currency I thought it would do, which is the first one I'm going to cover very quickly, which is going to be Euro USD. Euro USD, and regular viewers of our video know we are short. We're short from 122.20. We haven't changed our bearish stance since we entered the trade, and it's now basically 500 odd pips in profit. But it's not really a volatile down move, is it? Okay, I would have expected the euro to sell off a bit last week. Dollar generally strong, but the sell-off for me looks relatively mild. Now, the euro doesn't have a lot of upside in our view. Did a full video on the euro last week covering all the fundamentals of why the euro is probably going to go lower. And why it's got limited upside. So you can go and check that out. But in terms, just very quickly, the euro, it comes down a bit. Okay, I view it as a sell. So if we went up towards this resistance level, you could just sell back through the round number here, which is 117, or if you get up to 118, to sell back through this level here, or take a break at the two tails. Okay, you can see our targets 114 and then 110, so potentially a long way to go to the downside, but we need to pick up in volatility. What's interesting in this one is the speculative positioning. We take the last 3 months, when we're up at 122, these speculators are heavily long. They go even longer when it's falling here. They maintain their long position, although they slim it off a bit. Last week, they go up. Okay, so they actually bought the decline. I do not understand why speculators are so bullish. I think eventually they're just going to change their view, take their shorts out, take their longs out, and go short. And these two tails here, if they give way, we could see an upshoot in volatility. I just want to show you a monthly chart. We're sitting here, basically just around these two bodies here that I'm highlighting, and on the 20-month moving average. That gives way. You've got 114 in the way, which is there, but I think the fundamentals are really bearish for Eurozone. We should go to 110. Now, in terms of if you're trading the euro, I would just have a small position in this one, then double up the position when you get a high volatility candle or increase in volatility. Okay, so I would only have a small position in this one and then look to up my bet size when the volatility increases. You want to be in volatile pairs if you can, or moving pairs. So euro a little bit disappointed in the price action last week, but I think we are close to a big move to the downside. Now, in terms of the next pair, this one did well last week. It's AUD USD. Been bearish of this one for a while, since 77.80, and basically we trail sideways, then we fall. Look at this 20-day moving average, the green line. Rallies to it, just can't get away from it, just poke through it, and then we have the tumble down. We like using the 20-day moving average as kind of an area where, big downtrends will fade back to, big uptrends will find support. So this one at the moment, about 650 pips. Now, in terms of varying the bet size, when we're doing nothing here, we took out half our trade. Then on this candle here, the red one, we get a big break of 73. We double up, we fall nicely, and we take out half now. Okay, so we've got a really great profit on the extra trade we dropped in through the 73 level, and we can keep a trade in the market by banking half the profit. We can keep our stop outside of the market noise, so we're still behind 73. Now, hopefully, we can get our second trade back in at a better price. I think we could rally above 72, sell back through the round number. Got through this level, you just watch for this level to hold and sell back through this level. Okay, so you're basically varying your bet exposure. It makes it easier to hold long-term trends with partial banks of profit. And when you load up, you're looking for a big move in your favour, so your money's working hard. If I've explained that correctly, well, hopefully that's clear. Aussie dollar, commodity currency. We said it last week. We're going to see last week's forecast. Commodities are going down. They're a bubble. They've fallen. They're going to fall further. That will weigh on the Aussie dollar. Speculators pretty short of the Aussie now, so you might see a bit of a bounce, but bounces will be selling opportunities. Right, moving to another commodity currency which I want to look at, which is going to be USD CAD. Right, USD CAD. Now, in terms of this pair, since June it has been one of our favourite pairs. It's had one of our biggest exposures, and basically looking for USD CAD to go up. Got a nice run up there, retracement, get back in at 125.80. We kind of hang around a bit here, then we take off the upside. This red candle tail exhausts. Okay, now in terms of this one, when we're up at 129, member say just take 50% in. Okay, and yeah, you can't take it all in, you might say. That's hindsight, isn't it? Could have run on. Okay, so it took half in. Now we want to get it back in. Now, in terms of our stop on the remaining 50%, put it at 127.70s, just behind this tail and that tail there. Okay. Now, if we were taken out, we just go back in at 128.30. Okay. Then put our stop behind this strong support here, in my view, below the base of the big blue. Okay. We're still heavily bullish of the CAD. Okay. If we don't fall, and let's say we open positive, okay, you can see I put the 50% back in at 128.40. I've got a better price than I took it out at, and if it gets stopped out, I'm not going to lose much. So we'll do it either on a dip or a move higher. And in terms of this pair, speculators have nearly taken out their short position in the USD. They had a big one down here, which made us really bullish. Okay, they remained short the USD throughout that big move. Okay, so yeah, we're looking for USD to move higher. Obviously, CAD, commodity currency, crude oil getting crushed. I think it's going down further. Now, in terms of just very quickly, last week, Fed minutes on Wednesday. That was the big event of the week. Market really focused on the Fed minutes, wondering if they were going to talk about reducing stimulus, which was obviously bullish for the USD. Saying it last week in the member centre, you already know that they talked about reducing stimulus, because since the Fed meeting and before the minutes came out, how many Fed members actually said about stimulus being reduced? I think it was about 5 or 6, wasn't it? So you see the big headline in the media: the Fed talked about reducing stimulus, dollar goes up. You already knew that if you looked at what Fed members said. Yeah, we were pretty low exposure into Fed minutes, basically near enough doubled up before the release of the minutes. Okay, so this one we might get stopped out of, but we'll come back in. We'll look at another commodity currency now. We'll go to NZD USD. Right, NZD USD. Now, in terms of news releases, we normally like to take a reasonable bet size if we're going against the majority. I mentioned the RBNZ last week. Market was almost universal in saying the RBNZ would raise rates. So, if they did, would the Kiwi go up much? No, it's expected. If they didn't, it would go down. Now, what we had last week was this big red before the RBNZ. There was that COVID case in New Zealand and the lockdown. And I would have thought that would have changed the probability of the RBNZ raising rates in the market's eyes, but it dropped from just 95% to 85%. So the market was still pretty focused on them raising rates. So we just threw another trade in on this red. We followed through. We took our half off. We finished blue on Friday. Now, in terms of the trade, it went exactly as we thought. We doubled up, took it off. But yeah, the rundown really wasn't much. It was just shy of 100 pips on the extra trade. I expected more. But we did the right thing. We got some profit. Now we're sitting here blue. The snapping of the 69 level, in my view, pretty significant. This double trend line should hold. I think this move down has confirmed a reversal to the downside. Rallies back to 69 or a sell. Or if we don't rally back to 69, go through 68. It's a round number. And then look for her to follow on. I've got 65, which is 300 pips more to the downside. I will extend that target next week. So yeah, all three commodity currencies doing okay. Next one is going to be USD CHF. Came in long, put a reasonable size position on. I thought, we'd really run on to the upside, but we basically stopped into the 92 level, taken off half the position, and we'll look to go long at 92.10. This one's just basically hanging around our entry. I'm surprised actually that the USD didn't move a bit more to the upside, but still very bullish of this one. And if you want to do it as a fresh position, 92.10, then up to 94.30. The stop can be bought up tight behind this double trend line support. Now, in terms of here, very bearish, but we didn't see much action. We like trading Euro proxies because they tend to move a bit quicker. I'm just going to show one Euro proxy, which is USD NOK, which is our favorite at the moment. We had a big rally up, get stopped out, come back in long, bit of choppy trading, then off to the upside with a retracement on Friday. Not only is this a Euro proxy, we're looking for the Euro to go down, but it's a commodity currency as well. Norway is basically Europe's biggest oil exporter. We think oil's going to get crushed. Now, I'm going to come in fresh on this one. Just go through here. 910. 950 is our upside target, and we might even overrun that. So that's way up here, okay? And if we do break higher, I'll bring the stop up behind this level here. So behind the 9 level, okay? So this one looks really attractive. I like the other three. I covered them last week. I won't cover them this week. My views remain the same. USD SEK, USD CZK, and USD PLN. This is the one that I was saying last week. Previous trade caught us out a bit. We've had very choppy sideways action. When we broke up here, I thought about taking it out, but didn't. And I got stopped out at a loss. Said, yeah, if we get through the 20 level again, I don't want to see us hang around. So we cut up the blue there, finished near the high, then another nice blue, then another nice blue. This one now looks like it could be off to the upside. I'm going for chart highs. There's a lot of speculators short of this one. MXN is an emerging market. If the dollar gets really strong, the emerging markets tend to get hurt. It hasn't happened yet with Mexican peso, but very bullish of the USD and also the MXN commodity currency. Next one I'm going to look at, it's going to be USD ZAR. This has been a favorite of ours since we based down here. Really great move up. And this is, yeah, when you look at a trend like this is why you should trade emerging markets, in my view, because they are fast moving. It's about a 15% rise since we took our initial long. We've come in and out a couple of times and basically upped and downed our position size. But yeah, 15%, big rise. There's more to come. Going off the top of the computer screen to 16. This one, I would wait for this level to give way, or if we come back here, go back through this level. Not much good going on for South Africa at the moment. I just feel it's a big trend and we're not going to see much in the way of pullbacks. I think that's enough USD pairs. Let's go and take a look at some JPY pairs. Right, AED JPY, been following it down since the break of the 84 level back here. And yeah, we had a bit of sideways here where we reduced our exposure, okay? But on the break of 80, we added in some more and the breakout worked nicely, taken half away. I think it was about 78.50 we got out at, so not too far away from where we closed. So basically that is about 500 pips profit, isn't it, on the trade overall. We have banked in that along the way. We are a bit oversold. Now, how would you play this one? Well, if we come up through the 79 level, I would just sell back off this level of resistance. If we get up to here, just sell back through here, okay? What about if we don't rally? I would sell a break of the low. If you get a close below 78, we should quickly get down to 76, and I'm looking for 72, and your stop could be back behind this level here, okay? JPY has shown good strength, really good strength, and we haven't really seen any stock market weakness. And I think there's a big possibility the stock markets could correct the downside, and that will really firm the yen. Okay, is the number one safe haven. I'll discuss stock markets and the big global problems or global economic problems. I think there's going to be turmoil in the markets going forward. So I'll do a separate video on that, but I'm just really liking the look of the JPY. Next one, NZD JPY. We did this in a similar way to USD JPY, took the break of this second level here, and we moved down quite nicely, but not as much profit as I thought we'd get. Anyway, we've taken that out now. How would we play it? Get above 75. I just sell back through the round number. If not, take a break of this low here. We'll obviously bring our stop down if this low gives way. You can see very bearish 74, then 70 on the downside. It's a really messy price action here, but I think we've confirmed a trend reversal now to the downside, and basically these lows over here, they should hold rallies. Okay, we shall see. CAD JPY, this one has been a bit frustrating actually for us. We're short, and in terms of this one, we did rally back nicely on Friday, which is a bit disappointing. How would you play it? It's a nice exhaustion tail, but coming to big resistance here. I just sell back through the body, 84 and 82. Now this one is loaded with JPY, or no, it's not JPY, CAD longs. So yeah, if we break down, away from this body, hopefully we follow through to the downside. 86 should be tough resistance for it to take out. So like with the USD, I'm just extremely bearish of the commodity currencies against the JPY. Right, last JPY pair, Euro JPY. I've been following this one down since 131.70. Broke down there, rally, mid-Bollinger or 20-day holds, go down. Then we get into this choppy, messy price action. 20-day moving averages holding rallies, but kind of got a bit bored with it and took out most of our position. Okay, I still haven't added us back into reasonable size, just a small position, but I'm thinking of doing so now. This level here, we can break down. I would sell at 127.80, see if she runs. If she doesn't run, then take off the extra position. But I've got a feeling we possibly might see a big breakdown. If we do, we'll go to 126, a market level, and it's a weekly support level, then longer term 120. Bit similar to Euro USD. It's been boring, but I think the volatility could pick up. And if we do break down, risk to reward is really nice. You don't have to risk it back behind here. You can see my stop, 129.40. And our ultimate target is somewhere down here. So yeah, one to watch. One pair. I got caught out on this. I thought it looked really good. Selling the euro. Sold the euro on a break of these lows over here. So there. And she immediately bounces and takes me out on stop. Okay. But I think the euro is going to really struggle to get higher from here. 86 should be a big level to take out. If it holds, you just sell through here, then look for a move to chart lows again, and then on to 80. 80 is fair value for the British pound. It's historically still very undervalued against a number of currencies due to all that Brexit nonsense we had when the market was selling the pound for fun. For long-term trend followers, I think this looks a decent pair. Okay, just one more pair to finish off with. AUD CAD. It doesn't look that exciting, but I think it could get exciting. Market very, very short the AUD. Okay, and in terms of the AUD against the CAD, it's one of the biggest speculative net short positions on the COT Net Traders report, which is one of our favourite sentiment tools. And commercial hedgers, smart money, are heavily long. The move lower, there's not big volatility. We get above here, I'll add to my position, and I expect a big run of shorts up to 94, then 95. It doesn't look that exciting at the moment, but I think, what's your breakout? Go with the breakout. Doesn't follow through, don't have to hold it. But I think we could follow through strongly to the upside. So there's some pairs to look at. Should be an interesting week ahead. Back end of next week, we will have Jackson Hole, which is that meeting of bankers in Wyoming, where Jerome Powell, Fed president, is possibly going to talk about cutting back Fed stimulus. I don't see the market selling the USD and the JPY hard into that meeting. I think we should still see some strength. Obviously, there will be a little bit of corrective action, which I've discussed as I've gone through this video. But from a long-term perspective, being along the USD and JPY looks really good. and we've had no stock market weakness. So I think I mentioned it earlier with the Japanese yen. Get stock market weakness, you'll see massive volatility in favor of the dollar, yen, and other safe currencies over risk currencies. I'll do a video on my view of the big picture of the global economy, which is not good, and the bubble that is stock market. So I'll probably do that tomorrow if I get time. Right, that's the video. Thanks for watching it. Take care. Have a good trading week.